Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Monday, April 26, 2021. What I'll do in this video is a quick update on the equity markets. Really nothing new to report since the update this morning, so that'll be short. Touch on some of the recently highlighted trade ideas. I want to talk and then talk a little bit more on commodity and what I see as, and I'm now starting to see a lot of others are seeing it, a real risk to this to the stock market and the economy with what appears to be, you can't call it runaway inflation yet. We're coming off some low numbers, but the trend is very strong. And again, where I differ from Jay Powell and the Fed, he sees it as temporary, dismissing the rise in commodity prices and housing prices as just a temporary aberration. And again, the charts are showing otherwise. And again, that could be a dangerous thing in the market. So I'm going to talk on that. I'm going to give you a few examples of some things and look at a couple charts. Let's start out with the markets, get that out of the way. Again, nothing new to report. This is the levels, last week's lows that are the next. We're waiting for the next sell signal. We can get an objective short entry on something else, maybe some type of sell signal comes on maybe a candlestick reversal pattern before then. But as of now, that's the only level in the chart that I'm watching is last week's lows. Remember, that coincided with a successful test of support and a rally off that support in the S&P 500, which I'm about to get to in a second. I'm using the futures just because it's easy, and I've been tracking those. But that's the support level we need to watch. And there we are. We had a divergent high right here at the most recent high. Any marginal new high, meaning a slight high and then a reversal, will still be a divergent high. I haven't extended the lines yet because we haven't made a marginal new high. But should we, again, it's not gonna change the technical outlook. Doesn't mean we can't go a lot higher, and I'll talk on that too when I get towards the end of the video, talking about some early stage potential bubble action that's in play right now with both the stock market and the real estate market as well, and commodities. All right, support about 4,100 still remains the level I'm watching there. So we've had a few tags. S&P 500 futures here hit last week's lows, rallied again, have made a slightly marginal new high, maybe call it equal high. It doesn't matter whether it's equal or a marginal new high. You have the indicators continuing to diverge. So the divergence is still in place. And here's the story of the last week. It's this trading range right here. Again, normally I say when you get a trading range, the next break up or down will most likely determine the next trend. I would feel stronger about the downside move, not trying to be a perma bear, but just looking at the charts. And I say that because marginal new highs, breakouts to new highs that occur with negative divergence and overbought conditions, which was what it will be if we get it, or this one is, I should say, here's the overbought level right there. Those have a much higher rate of failing than breakouts that occur without it. So when you get a healthy trading range and you're not overbought, you don't have divergences, those are the breakouts that tend to stick, and these are the type that tend to fail. So that's the equity markets. And if you don't trade the futures, you want to look at SPY, there's your numbers. 410.39 are the recent lows. That unless we take that out, the buy signals, the market remains in the uptrend. Buy signals that we had a while back, I guess in the S&P 500, last buy signal here, we had a divergent low, we rallied off there, and those divergences are still playing out. But again, kind of locked in a sideways trend recently. So there's your levels to watch right there and there. Again, about 410.39 or so on SPY. Potential targets I've already given you in recent videos. Right here, first target zone, and then you have a trend line that'll probably come into play if we get a healthy correction. I'll update you with targets if and when we finally get those sell signals. QQQ 60-minute chart. The level is 334 right there. Well, I have it at 333.94. We're talking a 300-point security. 6 cents doesn't make much of a difference, so we'll round that off. So a solid break and close below 334. There was a little trend line breakdown and back test, and same story as the futures, where this was a divergent high. Any new high or equal or new high soon will simply extend the existing divergences. So while the primary trend remains bullish since our last buy signal in the NASDAQ 100, and that was the last buy signal was this breakout right here. That was the buy signal, breakout above the recent trading range. While that remains intact, trend is bullish. near-term trend, intermediate-term trend. The technical posture is bearish, so hence I'm looking to see if we get those sell signals. And if we don't, continue to trade where the opportunities are. Respect the trend, and that's the thing about it. It's been a resilient trend. Let's talk about trade ideas, where to make money. Just to highlight some of the things covered today, one of them is treasury bonds. You're not going to get rich quick unless you leverage up when trading treasuries long or short. But the 10-year, this is the 30-year ZB 30-year bond futures, or you can trade TLT. It's the ETF that tracks the 30-year. And we're in an uptrend, and as I pointed out today, objective long entry on a pullback to the trend line, and a buy signal or a breakout to come above that first target. It was already hit once, 159 right there. We hit my first target. We've been consolidating under it. So this and this, the 159 level on the uptrend, form a ascending triangle pattern. So a breakout to the upside would be bullish. Breakout to the downside, give it a little room. There's some support around 151, 157. You can keep a tight stop if that's your thing, or give it a little more room if you're trying to capture a bigger trend. That's the thing about stops. Tight stops, minimize givebacks in profit or gains when they're hit, but the tighter the stop, the more likely it is to be hit in just the back and forth noise. But again, objectively, you could have it somewhere somewhat below that uptrend line if you want a tight stop. Ideally, give it a 60-minute close. Sometimes you get those intra-period punches through there, and that's why I like to wait for a 60-minute close when trading this time frame, which is a 60-minute time frame. ZN, which are your 10-year bonds, and you can also use IEF as the ETF for that. There's your uptrend line. There was our divergent low right here, and that's bullish. And based on the technicals, and there were other things I covered at the time, such as the 30-year yield running into resistance and things like that. I think there's going to be more. I think this trend is still intact. I can tell you right now it's intact. There's your uptrend. There's your uptrend line. There's price support at 132, 194. So that's an objective long entry for ZN or IEF. Again, the ETF, if you want to trade that, and the next target is 132, 313. You can see I have some divergence lines, and I have them a little bit higher, and that would show that if we do get a reversal here off support, and again, objective meaning you can have tight stops just below that level, or you can give it a little more room. Sometimes you'll take out a trend line and then form a new trend line. But that would be the next target there, 132, 313. And if taken out, then that opens the door to 133, 233. You also want to watch, keep an eye on ZB as well, the long bond, if you're going to trade the 10-year. 10-year just has a little less volatility. All right, next up, I do want to do another update on natural gas. There's really no change since where I pointed the bonds out this morning or the stock market, but on natural gas, we did once again rally off that level. So two examples in this chart right here. This is the one I posted this morning. There's our uptrend line. We were right here this morning. We had a very brief intra-period break. What I mean by that, this is a 60-minute chart, and there's another example. See that white part? This is called the shadow, or when it's below the body, it's called a tail. The shadow is the white skinny part on both sides of a candle. It shows how low or how high that prices got during the period of that 60-minute candle formation. So there's a great example of a swift move down, and just as quick as it went down, it reversed, and natural gas remained above the trend line on the 60-minute time frame, and that would have given you, if you took it right there, we're right off that support this morning, and that's good for about almost a 3% rally right now so far in natural gas futures. And again, NG is the contract for natural gas futures, or if you want to use smaller, less leverage factor, same exact price levels as I'm giving you here, that would be QG, I believe is the symbol for the natural gas futures. I think they call it the mini, MINY contract. And you can see here, this was a target right here, 2832. So I had some levels on the other chart. Remember, futures roll all the time, and so when they roll, I have to redo the charts here. But if we can clearly take this level out, that recent high right there from last week, then that should open the door for another leg up. And I'd say we probably come up here to about, I'll have to revisit my last chart, but I'm looking at this one now and give you a line about 301 or so in nat gas would be the target there. There's potential divergence in place, and we do have to note that that could cause a little whipsaw or a reversal. And again, 60-minute close below the trend line would be your stop, or below this reaction low right there. Today's reaction low is a little low. I'd say a 60-minute close below that. Either way, good for another quick 3% if you jumped in today on the pullback or added to position. And the trend is bullish in commodities. Again, I'm going to get to that towards the end of the video, or actually we're kind of segueing into that right now. No, I want to cover a few different individual stocks first. But before I leave the futures charts, let me show you one more. And that would be wheat. And now here's a good example of how, I highlight divergences, both bullish and bearish, and in a very strong trend. And again, this is indicative of bull market action. These commodities have been harping on that, beating the commodity drums for quite a while. Our last breakout was right here in wheat. I highlighted this as a trade idea, and went up here to the 678.330 target, which is a pretty big resistance level. I showed you that on the longer term chart as well as wheat futures. And at that point we hit that, I mentioned it. Look, objective place. You could either tighten stops and continue to ride out. Here's a commodity in a bull market, and this was just a bull market correction right here in a much longer run. This is we're only looking at 3 months of price history here on a 60-minute chart. But what I was getting at, there's a case where the divergences were just burned through, and wheat popped. And just in the last week, when was that? That was the 22nd. That was the end of last week. Wheat's gone up another, what is that, 10%, over 10%. And this is, again, very bullish action for commodities in general, and across the board. Like I said, I've been done a lot of videos. You can take a simple commodity ETF or ETN. One of those that I've highlighted is one of my favorites out there is the GCC Wisdom Tree Continuous Commodity Index Fund. Since the beginning of the year, this has now outperformed the stock market. It's up nothing huge. I'm talking January 1st is about 13%. The S&P 500 is up about 12%. But again, just a strong, steady trend, potential divergence. And what I still expect to happen, sooner or later it will happen. This is a strong rally. I'm going to get to some other things in a second and talk about some other pricing pressures in the economy right now, including the housing market. But sooner than later, Powell will have to go back on his words, and he's going to do it gently. He might even have, my theory is, he'll probably have some, we'll probably see some of the other Fed governors or Fed officials, Fed members come out and just little hints here and there when they give their speeches. A lot of them during the week, there's usually a Fed member here or there talking, giving their views on the economy. And remember, they get together, they vote, and Powell, is the chairman. He carries the heaviest weight, and that's when they come out and decide what they're going to do on rates. And you can have some Fed members hawkish, some are dovish at any given time, and so I think you'll just see a little tick up in concerns about inflation prices, housing prices, things like that. And then that is the Fed starting to gradually, again, collectively shift towards that a little more hawkish stance, because for a long time now, for quite a while, Powell has pledged, which I think is insane because nobody can see the future, to keep rates at or near zero for the foreseeable future, years out. And that's just insane because, again, nobody can predict that. So I think this time around, well, I could tell you, we're seeing it in asset price increases. And again, it's a strong trend. So here's some divergences. And look, if these play out, in a couple weeks and we get a correction, well, first of all, a correction back to the trend line would be a buyable dip. Any solid break below the trend line would most likely trigger a deeper correction down to maybe this 1982 level. And if it gets really bad, maybe down to 1885. Again, that's on GCC, a one-size-fits-all commodity ETF. What might trigger that? Again, I think it would coincide with most likely what's going to put the brakes on this rally in commodities is going to be some pretty good rhetoric, hawkish rhetoric coming from the Fed. They're not going to come out of the blue and hike rates, unexpectedly. They'll talk commodities and rates down, talk commodities down and rates up before they make any changes. That I can assure you. You're going to hear whisperings of it. So that's it. It's a strong trend, and one that probably has a lot more to go based on the charts, based on the breakouts that we have. Again, I've covered these commodities in many videos in the past, so let's just not spend too much time talking about this particular one. Let me loop over to some of the individual stock trade ideas because the thing about it, I think this is going to have some pretty dire consequences on the economy and the stock market rally eventually, sooner than later. But the thing is, when you recognize a bubble or a trend, hey, stick with it. As insanely overvalued as it might get, there's money to be made. So I'll continue to focus and focus on these various commodities as trade ideas and trade ideas, investing ideas, because I know there's a lot more to go when you really go back in time. We're still coming off the bottom, and this is still early stage bull market action. Even within bull markets, corrections are going to come along the way, and so we'll do our best to try to sidestep the bulk or most of those corrections, maybe even capitalize on a short pullback trade. I'm going to get back to that in a second. Now let me just talk on a few trade ideas. Nothing much to update on the active short trade ideas right now. Most of those, not all, but most are up today. That Signet Jewelers, they're down down a little bit today. But remember, these individual short trade ideas I gave you in the last couple of weeks, some of the individual stock trade ideas can play out with the market going up, but they are much more unlikely to play out. It's going to be harder. They're swimming against the tide. So when the S&P 500 and NASDAQ 100 give me the next sell signals I'm looking for, the odds of these short trades going on to hit the targets that I've covered recently are going to go up exponentially. Keep that in mind. So right now, market's still on a buy signal, no sell signals yet. So I'm going to focus right now on the long trade ideas that I've covered recently. No particular order. I just have a watch list off to the right on the screen that you can't see. But I mentioned XLE. I'm not crazy about the energy stocks, but I would have been remiss to not have pointed them out as objective long entries recently as we pulled back to support 46 on XLE. It's up about another 1% today. Nothing huge, but you can see that's the support level 47, I should say 47.06. And look how it's held. Look at that. That candlestick body closed above it. This green candle means intraday we pierced it and then closed back above it, closed on it or above it, on it or above it, there, and again above it. So we're holding support right now. We're not rocketing, but then some of the other sector ETFs, you get more juice. And that's like XES, for example. 47.75 was the support. So if you bought it 47.75, you're up 5% already in just a few days. So these are, the trade ideas, and still no reason not to let it run. Have some stops or maybe some more upside here. Your heads up is going to be when the stock market turns, and if crude can't break out of this support level overhead that I updated this morning in the chart of CL that I posted. And then the other one is XOP. XOP, nice reversal off the support zone right there. Support zone comes in around 72 or so, and so far it's up about 7.7%, coming up to this trend line right here. I need to tighten that up a little bit and tighten that trend line up, pull it down just a hair if I can do that. Come on, where is it? There we go. I need to grab the end of it to do that. So right about there, we're close. A little more upside, and then we have the overhead resistance about 80.35. And remember, this one you can use GUSH, GUSH, if you want to leverage up a little bit. That's the 2-time. It tracks the same exact sector as XOP, and so instead of being up 7.7%, you're up 18.62. And you might say, well, why aren't we only up 15%? Why are we up 18? I talk about that in the FAQ page under resources. Go to the top menu of the site. Everybody curses these leverage ETFs, say they're the scourge and you're going to lose money. No, they're actually, yes, if you hold them in a choppy period or against the trend, yes. However, that leverage works in your favor, to your advantage. In other words, you'll get more than 200% or 300% if it's a 3-time leverage ETF. If the sector is trending in a fairly unidirectional uptrend, meaning mostly up days during an uptrend with very little give back, or mostly down days in a downtrend. You just don't want to hold them in a choppy range. That's when the decay eats at them, and so that's why you have better than 2 times what XOP has done on Gush if you use that as your proxy. And so these are really, I like them for hit and run trades, like for this one, for example, this was a bounce off support trade on XOP. I'm not getting married to this one long term. You might be bullish, and again, my job is to point out levels to buy, objectively go long, just like here. I give you a short sell signal on it, and you get out, or you go with DRIP, which is the inverse, and then you fall to support, a pretty good support level. PPO curling up, you cover your short, you go long, and that's swing trading. Okay, RKDA was the one of all the and several months back I covered and been bullish on a lot of the ag input stocks. Most of them had run. This one, don't get me wrong, had a hell of a run here. I mean, off this support level, 238, as you can see, is big support on this one, around 238. This run back here was 167% right there off the level. And that's the nature of this stock. And what it did, it since had correction, pulled back to that level again. And so that's where I highlighted just recently right here on that level again. It's an objective long entry, and boom, this one's up 17% and starting to move up. Again, the fact that it's really lagging behind the rest of the group is a little concerning, but right now people don't care about fundamentals, just like the housing market, which I'll get to in a second. Again, this is a stock you may not want to get married to, but you want to date it. In other words, this is when you're active trading, it's like Tinder. When you're looking for a soulmate, you go to Match.com. So that's investing. This is trading, and could care less what the stock does. 6 months from now, you get in a support, you get your run. Right now, you could trail stops up. First target's 344. That's these are old lines on here, but it would still be the first target. So if you got in there, set your stops a little below and let it run. All right, next up would be, let's see here, I covered the energy stocks. This one hasn't yet run. GSHHY, risky, relatively aggressive trade idea, but it needs to take out the 1055 level. It's pulled back to the trend line, as I mentioned the other day, an objective long entry there. But unless you break support, you could head down again. That's been the trend. But the trend has been upwards here with this trend line. This is a minor trend line. The big level again is 1055. Needs to break that, and it could run. I mentioned Alibaba the other day, off trend line support as well. If the lines populate, there it is, still above there, and still an objective long entry. Anywhere near, even where we're at now, that trend line with a stop somewhat below. PGJ is the Chinese ETF, one of the several out there. And I mentioned that at the support 6046 and the trend line break right there. And this one's moved up. Nice trade, 7% or so far. And then the higher flyers, DM. DM was mentioned right here a couple weeks ago in the long trade idea video at the support, and I said if that breaks, I'd like it even better down here because it's even better support at 1079. Hit 1079 almost to the penny. I think 1078 was a low, and rallying so far. Again, I think I just updated this one the other day, but I don't know where it is, about 30% gain so far. UNG, I already covered it in natural gas. So see, here's an example how the trend lines are a little bit different because the futures trading around the clock. We're only seeing 9:30 to 4 p.m. trades here, but I'm going to just move that trend line like I did a little bit there. That's close enough. What else do I have for you? ETGC, it's like a wash, rinse, repeat. Man, there's that 2244 former resistance, now support. There was our breakout candle, back test number 1, rally. Back test number 2, highlighted the other day, rallied again. So, and the moves are big. It's up 12%. This is a crypto. This is Ethereum ETN type or ETF type instrument. 24% off that trend line there. Divergence is still in place. So trade it as you want. Just again, it's simple stuff. Buy at support with a stop not too far below, and let it run. In a bull market, it's hard to say that overall that this one's not. Here's your trend. At least it's in a strong uptrend. These divergences could get taken out. VLDR. This one's starting to move. It was highlighted back here somewhere with a breakout objective long entry on a break above the downtrend line. There was our breakout candle right here the other day. That was on the 19th, And so from the breakout point, if I can get it, it's rallied as much as about 15% or so, and it's still in an uptrend. First target and sold target right now remains 17.29. Maybe sell a little bit below that. That's the actual resistance level. This one I believe was covered in the long trade idea video as well. It's in that group. I should have covered it then. 214, it was at support, price support, and with a downtrend line there was a breakout candle, and it's already now to the sold target I had on that one. That's about a 31% gain, right about $3. That line is there. I don't know why the level's not lit up. So that is time to book profits on that one, or at the very least tighten stops. If it can break solidly above there, that's bullish. But quick move like that, 30-something% in a couple weeks, take the money and run, in my opinion. And either revisit it, maybe if it pulls back and then builds up a nice base, then look to position long. And if you're an aggressive trader and you can try to short it, I can't make a case now. I'd have to study the charts, but you could do that. I'd have to see if the 60-minute charts confirm, and maybe try to swing it back down there. Maybe even wait for a break of the trend line here as well. What else did we have there? We had Plug. Still liking Plug. Plug was a trade off support there, 25.28 support, and or a break of the trend line right there. And you can see that trend line as well on the 60-minute chart, which we're pretty much testing right now. So here's the 60-minute chart, downtrend line. We're pretty much at it now. So Plug can pop through there. We do have some minor resistance at 30.61 to contend with, so that'd be the benefit of the doubt level. I would hold off till that gets taken out if you're not already in it for a full position. If you took it at trendline support recently, then you're already up 17 or so percent, and then you can add to it on a breakout above that level, targeting up here 42-ish, 42.18, or go off the daily chart targets of about 37.50-ish right there. Let's see. Okay, now I just want to move away and talk a little bit more about, again, what seems to be, what could I call it, early makings. I have to use the word bubble carefully. It's thrown around a lot, but let's just say things to be concerned about in the economy and in the stock market. It's all together. You guys remember 2007, the market topped and the real estate market peaked as well, and the bubbles were intertwined. The market went up that high because of the credit bubble, which really manifests itself in real estate prices primarily and credit derivatives, and boom, everything goes down together. You're not going to see a 30-40% drop in the real estate market and see the stock market going up because the wealth effect. People right now are buying cars, boats, bigger houses, newer houses, and spending money on everything because of the wealth effect. House prices go up. On paper, you look at your Z estimate on Zillow, and wow, my house is this, my neighbor sold for that. Same with your stock portfolio. So they tend to go hand in hand. And okay, now where I'm going with this, a little bit of a tangent, but so I've been, my whole life I've been boating. I live in Florida, and here's a very popular boating forum. It's called the Whole Truth, Hull. And you go in, if you have an issue with your boat, you just go in, search for it, and somebody posted something about it, or you can post the problem or the question you have, and somebody's going to answer it. And one thing about it, and where I'm going with this, it's very on topic. You go in here, and almost every post I've ever seen has something to do with boating. Question. You want to buy a boat, ask an opinion on a boat, ask somebody something. And so I get a weekly update on the most popular threads in the forum. And of course, every week there's something to do with boating, but I noticed one that caught my eye. In the title of the post was, how can real estate keep increasing? So number one, the fact that this is being posted in a boating forum, a completely off-topic thing, it says something right there. And then the popularity in this thread, it had, last check earlier today, 180 threads since the original post. And by the way, it was just posted in a regional forum. Now this is somewhat particular to this is a Florida Georgia forum here. There's areas around the country, things are going to be a little different. So I'm going to say that our real estate market in Florida is on fire. COVID hit, and all the northerners wanted to move down here. They wanted to get away from the cities. People realized they didn't have to live in the city to work a job in the city. They could work from home, blah, blah, blah. So I think most of you are aware of that. If not, I can tell you it's a real thing. And however, when you go through this thread, and I'll post a link to this at the bottom of the page. Very interesting to get these, because a lot of people will chime in and tell you what they're seeing, and then you're hearing, people in this thread, even though it's a Florida Georgia group, talking about things in Minnesota and all over the country, and how and the price increases that they're seeing, and pretty much again a lot of people. The vast consensus is, with a few dissenters, the vast consensus is is very bubblish, and we're either at or very near a top. And smart people are trying to sell their home, lock in gains, and there's some stories again, and also some things about some of the higher end real estate kind of peaking out. Anyways, I encourage you to read through there if you're interested in that kind of thing. It kind of gives different perspectives. You can scroll through all the threads, and there's one, I didn't read them all. There's too many. Don't have the time for that. I read quite a few last night. And one that stood out, let me find that one for you right here, is, this person chimed in and said they've been in the construction industry for 15 years now. And I can tell you this, I know this firsthand, 2x4s went from $3.60 to $6 almost overnight. I've been harping on that increase in lumber prices. I've got a ton of decking that needs to be done, and I'm going to put it off. I think I told you guys I moved into a new home, last year here, same city, and that's the last big project, and I can't even get somebody out here, and that kind of also dovetails on this. And I know this is somewhat regionally specific, somewhat, but again, when you read through here, a lot of people are saying they're seeing these similar things elsewhere. Now, lumber prices, that's not a regional thing. Those are lumber prices. Those are lumber futures. It's not Florida lumber futures or South Florida lumber futures. When I talk about LB, that's the price. That's the thing. So that's nationwide. And so there's still shortages. Here's an example. A simple 16 by 30 foot Trex covered deck has gone from 18,000 to 35,000. Trex is that artificial lumber that it's like a plastic type. Looks like wood, but it can come in any color. Really, you can get any color you want, and it's lasts forever. It lasts a lot longer. It doesn't rot out like wood. But just to show you, and again, this guy's sound. Remember, this is not a housing forum. This is not a stock trading or investing forum, so you're going to get all these diverse opinions, this straight up stuff, and that's a huge increase. And again, that's not it's what I'm hearing, in line with what I'm hearing down here. And he goes on to say a normal 10 by 10 bathroom has gone from 15 to 30,000 using mid-level finishes. Building a house has exploded from 250 a square foot to 350 and beyond. That's huge. Okay, this is unsustainable, especially this rate of ascent. And here's the thing. Okay, this guy seems pretty level-headed, by the way, and says, look, he wraps up by saying, look, okay, do I think, things come back to reality? Not sure, but I think they'll level off. From my experience, and I've showed you the chart of lumber futures, for example, before, it has a clear history when it goes parabolic, as it has. Never in the 20 plus years or whatever I've tracked it and I've seen the charts, never has it consolidated at high levels and maintained those prices. It's always come crashing down. I'm talking a parabolic run, meaning a near vertical ascent on the charts like this, which is what lumber's doing, is followed by this. That's how it's always worked. It doesn't then do this and then go up with the next leg. So anyways, that's what I wanted to share. So here's where we're at. And again, these kind of gains are unsustainable. You read through this thread, and they talk about how the younger generation is just priced out of the market, even those that might have been renting for a while. And by the way, this trickles down when new home construction costs are that high and house prices are crazy. It trickles down to rental costs. Rents go up, everything else, and and then the other part of that is, and this I can tell you, we've done a lot of work at the house we're in, and we still have some things to do. He said, add in the fact finding a reputable builder is very hard. Finding a reputable remodeler is even harder. So this guy went from a one-man show for the past 13 years to having 2 separate crews working full-time. The money and workload is just too good right now to take advantage of it. I can tell you, we had 2 contractors I used last year when we moved in the house to do a lot of work. One of them was really good, one sucked, had to fire him. The good one, I called him the other day for a small project, and he laughed. He's so busy. He said, Randy, I'd love to, and booked for the foreseeable future. Not a chance. Can't get to it anytime soon. Okay, why did I say all that? Well, that first part is the inflation for materials, this whole thing here. This talks about wage inflation and additional costs on housing. You know, it's one thing again to absorb the huge cost increase in materials, lumber, and everything else that goes into a home, but add in the fact, you know, these labor shortages. And again, is this, you know, more of an issue in Florida than elsewhere from what I gather? Yes, but it also, when I go through, and you can do the same read through here, you're seeing very you know, comparable increases or close to it, in some cases as much in many other areas of the country. And again, kind of getting frothy. It's feeling a lot like 2006. And then just this morning, you know, I came across that thread yesterday, and again found that interested, being, you know, in a boating forum and all the amount of buzz and activity that it garnered. You know, Wall Street Journal published this one. I came across this one today. Insurance costs threaten Florida real estate boom. In the most expensive state for home insurance, carriers seek to curb litigation and limit payouts on roof claims. So, you know, I have a little side story. So it goes on to say, and you can read the article. You might have to be, I think you have to be a subscriber. If not, what you can do sometimes, do a Google search for the title. So, you know, cut and paste that title, Google search it, and quite often, if you click on the first link, the return from Google, it'll give you the article. I don't know why they do it without having to log in. Again, I have a membership here, a subscriber, so I can see the whole thing. And what it talks about is, and again, now this one is more regional specific. As I just said, lumber prices are the same here roughly as they are in Seattle or whatever, close to it. But as far as this goes, in Florida, you know, is a big market. The insurance costs are skyrocketing. You know, we had a couple of hurricanes a couple of years ago, Irma and one other one that hit, and they talk about that and the amount of claims that have surged, and insurance costs are going up in many cases, and they cite a lot of examples. On average, they said they've already gone up 20-something% in the last year or two. And they cite many examples of people who are being dropped, or they're getting quotes, their rates are going up 40, 50, sometimes 60% and more, almost doubling. It's insane. And I can tell you, when I moved into the new house, my next door neighbor, he had one of those tile roofs. I don't know if you can see in the picture. I think, yeah, these are tile roofs, like Spanish tile, barrel tile. And he told me he just had his house done. Don't hold me to the number. I think he said he has a house and then a boathouse out back, and has the tile too. I think he said it was $125,000. These roofs are expensive, and he didn't pay a red cent. I was shocked. He said his roofing company owns a law firm. He said, Randy, they have a 98 or whatever 99% win rate. You contact them, they sue the insurance company, and they get you a new roof. I couldn't believe it. And then I was, you know, met another neighbor down the street, and he said, I was talking to him about that because I see tons of new roofs going on, or were just put on right before I moved in this neighborhood, or being put on currently. And he said, he laughed, he giggled, he said, no, that's not a roofing company that owns a law firm. He goes, that's a law firm that owns a roofing company. And this article goes on to talk about that. It's just gone crazy. And so, again, it is very inflationary. It's the cost of living. It's that whole cost of living index, and housing is one of the biggest components of the consumer price index. So again, these are not little increases, and you have the Fed saying being completely dismissive of inflation, and I think by the time they realize the cat's out of the bag, and that has been historically what's happened. When you realize and you're behind the curve on it, when the Fed has always been behind the curve on things, it's usually too late to contain it. So, you know, if you can't beat them, join them. The whole takeaway is, look, that stuff, and maybe I'm wrong, maybe inflation, maybe something happens and commodity prices start dropping, and home prices somehow drop, and lumber prices, and labor costs, construction costs, but yet the stock market holds up and the economy holds up. That's, to me, I put the odds at near zero because they're so intertwined. But unless that happens sometime soon, the Fed's going to have to acknowledge this inflation thing. And when they do, the only way they'll try to jawbone it down first, and that in itself will probably rattle the markets that are addicted to low interest rates and excessive liquidity that they're pumping into the system. So if the jawboning doesn't work, then they'll actually take some measures, taper it back on their bond purchases, maybe throw in a little sneak in, or announce it well in advance. They would never shock the markets knowing this Fed. But a quarter point rate hike or something, and that could take things down. But I'll tell you now, there's a very high correlation. I told you I checked GCC because it's a well-balanced ETF, commodity ETF, and I think it was up. That and the S&P 500 are tracked almost perfectly. Here, I can show it to you there. This is, I think you can see this here. This is the GCC in black, the commodity fund. You can see it's taking off recently. It's really running almost parabolic. And this is the S&P 500. So let me scroll back. There's November of last year. You can see they're mirroring each other. And for many years, commodities were in a bear market for the last decade or more, going down, and the stock market was in a bull market. Now we've returned to that positive correlation. So this is what the Fed, this is what they're going off of. They're driving, as they always do, driving and looking in the rearview mirror, thinking, okay, commodities are in a bull market. This is just a transitory, brief rise in commodity prices, and it's going to go away. But again, that seems to me this is just early stage bull market action, and once the Fed realizes that, boy, it's really starting to put a damper on consumers' pockets. And in that thread, that voting forum thread, there was one person that said, "Hey, I run a business, and I had the first time, and I forget their products. Let's just say it's widgets. They had to increase. They had a cost from their supplier, so their product." Had the first increase in years, and then they got word that their packaging, they have to now increase. They had a big increase in their packaging as well, and so boom, that is just one little example, but it's happening everywhere now, that is going to permeate and impact this rally. So look, as long as the trend is up, that's where there's opportunities. Stock market, the trend is up, but you can see the market rolling out here. And again, the technical posture of the stock market, I can make a much stronger case for a sizable correction from the long-term charts. Need those sell signals in the stock market. That's this purple line here. And again, they are highly correlated, so don't get me wrong. If one rolls over soon, there's a good chance we'll see both roll over, but risk reward, looking out for the next 5 years, 3 years, let's say at least the next year out, commodities still present a much better risk reward profile to me than equities. And just look at some of these, like I showed you earlier, wheat taking off, corn. Look at corn prices. Look at this surge right here. And just in the last couple weeks here, corn up another 27%. And you tell me that's not inflationary. And the JJG is our grain ETF, corn, wheat, and soybeans. I've got that somewhere, and you can see it doing the same thing, just big moves up. And so that's again where to make money right now. And as I said, there are divergences. Those divergences may play out, but they may very well get burned through like they've done so many times before. So if you want to capture, I went over in the last commodities video and showed you, as much as this run in corn and wheat has been so far, I've showed you previous runs in the past where they had a lot more to go, 300% or more before the first big correction set in. Okay, long video, so I'll wrap it up here. Again, towards the end of the video is just me kind of rambling and highlighting some things I'm seeing on the inflation front. But the beginning of the video showed you trade ideas, levels to watch, what to watch for in the stock market, and what to watch for in some of these commodities. And again, if I see anything else that I missed, I'll throw that in. I'll put a link to those articles I talked about in here under the in the comments section under this post. Or no, I'll include it with the post. And then anything else I missed, any charts or anything that I come across today, if I don't do another video or post another homepage post, I'll just put them in the comments section below this post. So you may want to come and check back from time to time on that. This has been Randy Finney with Right Side of the Chart. Have a great day.